Welcome to this video. Today we'll be talking about what a trust is, because I want to make sure that as someone who's working hard, someone that is building something with all the assets and all the investments and everything that you have, I want to make sure that it's all protected. And it's trust, it starts with you knowing what a trust is, because I don't want to be like, hey, I'm a trust consultant, and you're like, what is a trust? Why do I need a trust? So this video is to explain to you exactly what a trust is. So a trust at its core, a trust is a legal arrangement where one person, the founder, transfers ownership of assets to another person or group of people, the trustees, to hold and manage for the benefit of specific individuals or entities, the beneficiaries. It's a relationship based on confidence and good faith, hence the word trust. So, who am I? I'm Lumka. I'm a passionate and dedicated trust consultant and asset protection specialist with a mission to help businesses and investors protect their wealth, secure their legacy, and navigate the complexities of estate planning. With expertise in trust creation, management, and compliance, I work closely with my clients to provide clear, practical, and personalized solutions that are tailored to their unique needs. So the other reason why I'm passionate about that is because my parents were in business. My parents owned a shop, they owned a security company, and they owned a farming business. And one day, something happened in their farming business and they got sued and they lost everything they had worked hard for. And one thing I know for sure is that had my parents had a trust, that wouldn't have happened, because then they would have been able to separate risk from value. But now, because they didn't have a trust, everything was intermingled, everything was tangled together. Hence, they lost almost everything that they had. So now I'm passionate about helping other families not go through what my family went through. Because as a child, imagine being able to go to a multiracial school, being able to get what you want, and being able to travel, like all the nice things. And all of a sudden, this happens, and our lives change for the worst, our lives change forever, and it's the worst thing. I wouldn't wish it on my worst enemy. So that's why I'm passionate about making sure that as people, when we are building the assets that we have, the investments that we have, we don't leave everything exposed. We make sure that we are protecting what we're building. That's very important. So think of a trust as a container. You place your assets, whether property, investments, cash, or business interests, into this container. Once inside, these assets no longer belong to you personally. Instead, they belong to the trust itself, managed by trustees according to the rules you've established in the trust deed. The trustees don't own these assets for themselves. They hold them on behalf of the beneficiaries you've designated. This separation is between this separation between ownership and a benefit is what gives the trusts their power. So had my parents had this, they would have been set. So the separation is very important. That's what gives you the leverage, because you know that all the things that you've worked so hard for, all the things of value that you have, are in a different container to the risk, which is the business activities and everything happening in the business, where you could get sued like my parents did and lose everything. You can protect assets from creditors, reduce tax liabilities, ensure continuity of wealth management across generations, all while maintaining a degree of control through the trust governing document. That's the beauty of it, that you can still maintain control. So you will be controlling everything but owning nothing. Unlike a will, which only takes effect after your death, a trust can operate during your lifetime and continue long after you are gone. Unlike a company, which exists primarily for business purposes, a trust exists to hold and administer assets to your specific wishes for the benefit of people you care about. That's very important, because all the hard work that you've put in to get the assets and everything that you have, you want to make sure that you have control on how you actually control the stuff. Because if you don't have control on how you control the stuff and how you manage it, and things happen and you lose everything, you don't want that, because you've worked so hard. Understanding how trust function requires grasping the relationships between three key parties. So it's the founder, the trustees, the beneficiaries. Each plays a distinct role in the trust operation. So the founder, also called the settler, the donor, the planner, is the person who creates the trust and typically transfers the initial assets into it. As the founder, you draft the trust deed, the document that sets out all the rules governing how the trust will operate. You decide who the trustees will be, who the beneficiaries are, and what powers the trustees have and what restrictions apply. So that's the control and the beauty of it, that you still decide all of these. You might transfer your home, your investment portfolio, your business interests, or cash into the trust. Once you've established the trust and transferred assets, your formal role largely ends, though you can be appointed as a trustee if you wish. The trust then operates independently according to the terms you've set out. However, there's an important caveat. In South African law, if you retain too much control over the trust, for instance, if you are the sole trustee with the power to appoint and remove other trustees at will, you'll also be a ben- you also you are also a beneficiary. The courts or South African Revenue Service may look through the trust structure and treat the assets as if they belong to you personally. This is called the alter ego doctrine, and it's something every founder must carefully avoid. So, if you are someone who still treats everything as if they belong to you, but they're under a trust, that's a big problem, because then they'll call it an alter ego or a sham trust, and it will not be valid and it won't be protecting you. So when things come and things happen, like all the benefits of the trust, you lose them all because you know of the alter ego, and you don't want your trust being called a sham trust or being an alter ego. So it's important that you set it up correctly. So who are the trustees? The trustees are the people or institutions appointed to manage the trust assets. This is where the real work happens. Trusts have a fiduciary duty, a legal obligation to act in the best interest of the beneficiaries, not themselves. They must manage their trust assets prudently, keep proper records, make distributions according to the trust deed, while tax returns and ensure file tax returns and ensure compliance with all the legal requirements. Most trusts have at least three trustees to ensure proper checks and balances, though legally you only need one. Trustees can be family members, professional advisors like attorneys or accountants, trust companies, any combination of these. They can be paid for their services or offer work for free, like offer voluntary work, like offer a free service. Critically, trustees don't own the trust assets for their own benefit. They hold legal title, but the beneficial ownership results rests in the beneficiaries. This split between legal and beneficial ownership is fundamental to how trusts work. So, who are the beneficiaries? The beneficiaries are the people or sometimes organizations who benefit from the trust. They might receive income generated by the trust assets, capital distributions, or both, depending on the what the trust deed allows. Beneficiaries can be named specifically, for example, my children, John and Sam, or described as a class, such as my descendants or my spouse and children. And one thing I can tell you for sure is that it's better that you describe them as a class. Because if you name them John and Sam, God forbid you pass away after you've had another child, Peter, Peter will not be in the trustee. Peter will not benefit because they're not named. But if you put a class, then Peter falls right under that because he is part of the descendants and he is part of your kids. So he is your child as well. So he falls under my children. So I would highly suggest that you use a class for that. In South African trusts, beneficiaries typically don't have an automatic right to trust assets or income. Whether they receive anything, when they receive it, and how much they receive are usually decisions left to the trustee's discretion. This discretion is what provides flexibility, but also requires trustees to exercise judgment wisely and fairly. Trusts still offer massive income tax advantages. Huge estate duty savings, protects your assets against creditors, and you can make excellent provision for your dependents in the case of your death. Trusts are important for meaningful wealth creation. It is of vital importance that you receive advice from a specialist when establishing a trust. It is also important to obtain advice on how to run a trust correctly once it has been set up. This is very important because if you have a trust, it will and it's set up incorrectly and it's not protecting you properly, then you might as well have a stack of documents that you're keeping. Because what's the point of having a stack of documents that you're keeping for nothing that are not protecting you? So it's very important that you make sure you have a specialist, someone that actually knows what they're doing, like we do, help you create and establish your trust so that it is set up and done correctly. So you can book a call with us if you don't have a trust, or if you do have a trust but you want us to order it for you to make sure that it's set up correctly and it's done correctly. You can book a call with us. You can go to lumkastirman.com for that. A trust is a necessity under all circumstances to protect yourself and your family against financial shocks. Furthermore, a trust builds great wealth. So thank you very much for watching. Like I said, if you're someone who would like to make sure that you protect what you've worked hard for, to make sure that you don't just leave things to chance because we don't know what tomorrow brings, and we're not promised tomorrow. So we have to make sure that we are ready. And here's the other thing: a trust could not help you at last minute. You have to make sure you set it up at least 2 3 years before something happens. So it's better to set it up now before anything happens. And best of all, you want to make sure that you start saving on tax now, because the more money you save, the more you have that to leave to your family, to the people that you love. There's more that's left behind for them. So if you have not set up a trust, make sure that you book a call with us. Make sure that you join our waiting list. If we still have the waiting list, make sure that you join that so that we can help you establish your trust so that you can protect the work, like the things that you've worked hard for so long for.